Okay, recording this video on Saturday, the 27th of June 2020. It has just gone 2:53 p.m. Chicago time. I do hope you are doing well. Hope you're enjoying your weekend. It's a beautiful day here in Kauai. After a beautiful day yesterday, where we actually had some swell. Unbelievable. Usually during the summer months, the swell's coming from the south. From the Southern Ocean, and the swell's a little bit weaker, the waves are a little bit weaker. But yesterday we had a little bit of swell kind of pop up from the north, and it kind of came into Hanalei, and it was awesome. It's great to be out getting some waves. Usually during the summer here there's not much kind of going on, but that was pretty good. You might have guessed we are stuck here in Kauai. Normally this time of year we're back in Australia. And enjoying the winter swells in Australia on the east coast, and there's some great video coming out from some of my favorite beaches, and it's kind of killing me to be here, but we can't get out, can't go to Australia without quarantining, and then we're not even sure if we could leave Australia to go to Europe, so we've just decided to kind of stay put. Anyway, so that's our current situation. Not all bad. Kauai is not a bad place to be hunkered down. But anyway, charts. Let's talk about some charts. All of my charts at the moment on some of these markets just look absolutely identical. To some extent, that's not unexpected because these days, there's a high correlation between so many markets. They're moving in exactly the same kind of direction. But it's uncanny that all of the patterns on beta sine wave are just so similar. And it means we'll be lining up for something in the next few weeks where all of these cyclical patterns will kind of converge and go off at the same time. And so that's going to be really important. But I'm going to just walk you through what beta sine wave is showing on these different charts and what I think it means. So I'm going to be concentrating on this right-hand panel of these charts going forward. This is the Emini continuous contract at ES day and night session. Nice smooth kind of price lines for the Emini here. So this is my usual little spiel. Below the price lines here we have beta sine wave in three different time frames, calculating the cyclical energy and the turning points or predicted turning points using beta sine wave. So these thick lines are the highest time frame. Then the next thickest lines are the intermediate time frames, and the thin lines are the lowest time frame. Now it looks like a plate of spaghetti, right, like that, and I absolutely agree. Normally what I do is I switch off the lowest time frame and just have the high and intermediate time frame on there. I suppose I could shade the different lines a little bit differently, but thickness I think draws out the point. The two lines to concentrate on are the very thick lines here and the very thin lines kind of here, and I'll talk about those on the charts themselves, but it's a little bit of a mess, but you can switch each of these off kind of individually. And then using that cyclical activity, we plot support and resistance points on the price bars themselves. Resistance lines are in white. The lowest time frame are little dotted white lines here. The intermediate lines are a little bit thicker, and then the very thick lines are resistance lines on the highest time frame. And support lines are in red. So there's a little support line on the lowest time frame. We got the support lines on the intermediate and the highest time frame, the thicker lines here and the very thick lines down here. So then based on breaks of those support and resistance lines, you can plot uptrends and downtrends, because uptrends are consistently breaking through resistances and kind of moving higher, and downtrends are consistently breaking through support levels and moving lower. So that's how we plot uptrends and downtrends, strength and weaknesses on the price bars themselves. Let's not talk about the background coloring or what's going on the left-hand panel over here, but just concentrate on what beta sine wave is showing us. And it's showing us a few things. First of all of these charts I'm going to show you will have exactly the same pattern, going off on slightly different days, but the pattern is identical between each of these charts. So the first thing to note is that we are in an uptrend because we are above support level on the highest time frame here. So always trade in direction of the highest time frame. And the support levels in, we should be going long during this sequence. If I back it out here, you can see here support level comes in on the highest time frame, long pattern here. As soon as the resistance line comes in on the highest time frame, I'm looking for short trades, but you need to have the other time frames kind of break down as well. So we didn't have a breakdown into an uptrend until we broke through this 2850 kind of level down here into a downtrend. But in general, I always say just trade in direction of the highest time frame. And normally what happens is once the trend has gone in this, once the support line is in this direction, it will keep going until that resistance comes in, when we get these lines coming together and plotting on the high side up at 100 and starting to roll over and going the other way. That's the highest probability trade, is this will play itself out, support to resistance on the highest time frame. So that's the first thing to note, that we're in an uptrend because support in the highest time frame has come in. The second thing to note is that we've busted through resistance on the lowest time frame and the intermediate time frame. The last time we came into resistance on the intermediate time frame, we could have an overshoot here of this break of the lowest time frame being caught by this intermediate time frame and potentially have a rollover at that point. And that was a very important day when we were potentially breaking down through the 2800 level, but we didn't. We continued to break up through the 2900 levels, so we have a continuation of the uptrend. Breaking through these two resistance lines means that the trend is strong. It's kind of going to continue to the upside and go in and put in a pullback to end of trend, at least on the lowest time frame. So that's the second thing to note, that we've broken through these two. Therefore, that means they haven't really kind of made any trouble for us, and the trend is strong, and we're continuing kind of through there. The next thing to note is that we have had some weakness in the last few days, and we are coming down on the lowest time frame here to make a support that will come in at some point. So these two lines, these thin lines, need to come to negative 100, cross at that point, and that will be when we get a cyclical turning point, which will be a pullback in an uptrend as long as it's above this kind of breakout level on the lowest time frame. So we've got a cyclical support going on in the lowest time frame that is going to come in the next couple of days. And interestingly, we're coming up to a seasonal trade. There are 5 kind of important seasonal trades that I kind of pay attention to. Don't trade them as seasonal trades, but it's good to have it, that information in the back of your mind. One of the important ones is the 4th of July. I'll link to the seasonality indicator and the other kind of 4 trades that kind of go off at various times during the year. 4th of July is interesting. There's a lot of psychological kind of impetus behind several of those seasonal trades. One of them is kind of just a bullish feeling, an upbeat mood. And around the 4th of July, leading up to the 4th of July, we have typically strength in the market. And it's just interesting that we've got this cyclical turn coming in due in the next day or two, lining up with a seasonal trade that says we should be bullish. The 1st of July leading up to the 4th of July and a little bit kind of through there. So during that period leading up to the 4th of July and just after it, we usually get a bullish sentiment and kind of an upbeat market. Now, obviously, this current situation in the world and everywhere is very odd. So whether that will play out as a typical kind of 4th of July pattern, who knows? We have a lot of negative news coming in about kind of lockdowns and relocking down and hospitalizations and so on. So who knows if we can kind of break through that overarching kind of negativity to kind of put in some kind of bullish pattern. But it's a potential, and we've got that support coming in due in the next couple of days on the lowest time frame. So what that means is that'll be a pullback support that'll then play out, pullback to end of trend, which means we've got some weakness going on right now, but I think sometime during this week that'll come in, and that'll be important, and it'll lead to a little bit of a continuation of the rally, which then will be putting in the continuation of this support to resistance on the highest time frame. So there is some time to run, but before these lines kind of come up to 100 and cross and start to turn over. So I know it feels bad right now, and that the market's kind of come up here, particularly on the Nasdaq, kind of crossed 10,000, very important kind of psychological level, and just bounced off there and kind of weakening. But I think it's a little bit too early to like say, that's it, it's all over, let's get short for the next move down. I think we've still got time to run. Support to resistance on the highest time frame, which will play into this pullback to end of trend on the lowest time frame. That's when all of the charts will start to come together, and that important turning point we'll see on a bunch of different markets. So that's my general view of how this is going to play out. I'm going to show you the other charts just to show you how this pattern is almost identical between these different charts. That's the E-mini. Then let's look at the Dow index. Same kind of thing here. We've got the support in the highest time frame. We're playing out support to resistance. We've broken through the low and intermediate resistance levels here, and we've had weakness, and we're coming in. You can see those two little thin lines kind of coming together for a cross on the Dow. So in the next couple of days, we're going to put in that cyclical support and bounce from there, I believe, and to play out this move kind of fully. So anybody that's kind of shorting this at the moment, potentially is a little bit too early. Now, having said that, let me just go back to the E-mini. It's like, what would negate this whole theory? And I've talked about this before. If these two support resistance lines are broken on the downside and we just slice through 2700, then all bets are off. This thing is not going to play out as a nice little support to resistance. These things have not been helpful in terms of support and resistance lines, pull back to end of trends, and the pattern just hasn't worked at all, and we just kind of go the other way. So if it does go through those two levels, kind of all bets are off. On the Dow, they're a lot closer together, which is interesting from that perspective, and we've had a whole bunch of blue professional bars kind of come in here at this 2700 level. So just bear that in mind. On the Dow, it's looking a lot weaker. However, on the flip side, this is the Nasdaq. So yes, the support level didn't come in at the lows, came in a lot later into that move, but we are still above resistance on the low and intermediate time frames, and we're coming down to that cyclical cross. You can see those thin lines there, both kind of coming down at some point in the next few days. So that's interesting. EEM, which is an ETF that tracks the emerging markets, same deal. There's that support in the highest time frame, busted through resistance on the low and intermediate. We're above there, and we're coming down. On this chart, we've actually had a cross. So here, the thin lines here on the lowest time frame have actually crossed. So we're looking for a little bit of strength, and that'll be a pullback in an uptrend support level that goes in on the emerging markets. HG, copper. Kind of dot to copper, so it shows us kind of the strength in industrial production around the world. Same thing here. Support's coming on the highest time frame, busted through resistance on these two time frames, and those thin lines on the lowest time frame heading down for that cross, for that support at some point. And then IYR. Now, next three markets, slightly different patterns. So this is, first of all, IYR is real estate ETF. Support in the highest time frame come in. We break through the resistance on the lowest time frame, but we get caught and bounce off resistance on the intermediate time frame. So real estate is weaker than equities on copper because we never made it through that second one here. But we're heading down to support on that lowest time frame. So at some point in the next couple of days, that support will come in. But real estate is not as strong. Also, crude, same thing. Here, initially, we have just bounced off that resistance on the intermediate time frame there. There's the support in the highest time frame, busted through resistance on the lowest time frame, been caught initially by resistance on the intermediate time frame. Let's wait and see. But again, those lines coming down across, thin lines for the lowest time frame, put in a support at some point, but weakness until we get that cross. HYG, which is high yield growth, which is the jump bond market, same as real estate and crude. So we've got busted through resistance on the lowest time frame, but been caught by resistance on the intermediate time frame and rolled over. And there's that support on the highest time frame kind of come in, and the two lines kind of coming together. So you can see on all of those, incredibly consistent kind of patterns going on. The two things to note is in the next few days we're going to have cyclical crosses on all of these markets on the daily chart kind of come in, and I think that'll be support that'll lead into a little bit of a seasonal rally, seasonal trade into 4th of July. And the other thing is that if that's correct and we get that rally, that means this support to resistance is going to play out, and when those lines start to kind of come close together, that's when we're going to get all of these markets kind of rolling over at the same time. So that's going to be interesting. In terms of like going down some time frames to see, well, where are we going to get caught? Is it in already with Friday's activity, that low? First chart I'm going to show you is the 4500 tick bar chart, which is the highest tick bar chart that I look at. And on Thursday's activity, so this is the close of Thursday, the open of Friday, and the close of Friday here. So the close of Thursday, we had that big breakaway move, blue professional bars into the highs, exhaustion buy, bearish divergence, and we roll over and come down. To end that move, typically what we'd need to see is the flip side of that. Exhaustion sell, bullish divergence, and blue professional down bars. Well, we've not seen any of that yet. No exhaustion patterns on the downside. So I think we're still going to look for some weakness, Monday, Tuesday, until we see exhaustion sell. And that could be quite nasty. So we'll have to kind of see how that plays. But again, a lot of weakness on Monday. Let's say we have a really nasty day on Monday. The pros could be looking at that as a great opportunity to pick it up for that cyclical support level to come in on the daily time frames for our next move up, because that'll be a lot of people kind of on the wrong side of the boat. So the next chart that we might find helpful to kind of identify that turning point in the low is the 45-minute chart here. I know I've said these support levels where the blue professional bars kind of come in have been very handy kind of going forward, but with Friday's activity, we've just broke into a little bit of weakness here. We're below support there, and it's plotted white there to show that weakness. We've still got a little bit of time to run before these lines kind of come together on the highest time frame and find support. So I don't know if we're going to go through this 29.73 and maybe kind of have continued weakness, but it's important. The blue professional bars kind of down here a few days ago that held that level. So let's see how that kind of plays out. But we've got that a little bit of weakness there that's got to play itself out until these support and resistance lines on the highest time frame come together. Lastly, the 15-minute chart. 15-minute chart is really tricky because it's noisy. But you can see the same kind of thing here, the blue professional down bars into those lows. We've had them here and here and a little bit here. It's not holding quite yet. We've got white bars going on here on the 15-minute chart, and we're below this support here, so we probably got to make some pullback to end of trends and reverse this on the 15-minute chart as well. Start to show some red bars here. This is kind of holding on this time frame. So I think the 4500 tip bar chart is going to be most important. Looking for exhaustion, sell, and blue professional bars to kind of come in. But anyway, so there we go. That's my story for the weekend. Is all of these charts look incredibly similar. I think we're going for a very important turning point in some weeks to come. And in the next days to come, I think there's a support level kind of lining up that goes into this seasonal trade for the 4th of July. Let us see. It's going to be an interesting couple of days. I think Monday's trade is going to be fun. Volatility is great right now. Volume's great. Speed's great. Fills are great. So all of that's a very good kind of trading environment. So I'm enjoying my day trading, and I hope you are too.